Hello students, welcome to Accounting 2302, Managerial Accounting. This is Dr. Mercado. Welcome back. Now in this chapter we are going to be covering Chapter 21. Chapter 21 deals with variable costing for a management analysis. Please make sure that you do review the chapter, you read it in its entirety before you begin working on your assignments for the week. Okay? Now in this lecture I am going to be covering problem 2101, which deals with absorption and variable costing income statements. Okay, so this is the problem that we're going to be tackling in today's lecture. So we are going to be preparing two different types of income statements, one under the absorption costing method and the other one under the variable costing method. Okay, so the data that is provided to us. Okay, during the first month of operations ended March the 31st, Icebox Refrigeration Company manufactured 165,000 mini refrigerators, of which 150,000 were sold. So that means that we did not sell 15,000. That's something to keep in mind. Okay, operating data for the month are summarized as follows. So we have sales of 11,250,000, and then we have our manufacturing costs. These are the costs associated with producing those mini refrigerators. We spent 1,980,000 in direct materials, 4,290,000 in direct labor. We had 412,500 in variable manufacturing cost and 2,475,000 in fixed manufacturing cost, for a total manufacturing cost of 9,157,500. On top of that, we had selling and admin expenses. We have 450,000 variable and 1,125,000 fixed, for a total selling and admin expenses of 1,575,000. Okay. The instructions are to prepare an income statement based on the absorption costing concept and prepare an income statement based on the variable costing concept. And then once we're done preparing those two, we're going to explain the reasons for the difference in the amount of operating income reported in 1 and 2. So, like I've always stated, when you are solving a problem, it is important that you locate the section in the ebook that speaks or that describes or that explains that specific part of the problem. Okay, it's important to go back and reread those sections before you begin tackling the problem. So I went back to my ebook and I located the section that speaks about absorption costing and variable costing, because that is what we're going to be working on this problem. Okay, so let's quickly go over absorption costing. Okay, absorption costing is required under generally accepted accounting principles, GAAP, for financial statements distributed to external stakeholders. So we are going to be distributing this information. It needs to be under the absorption costing method. That is what is required by the law, by GAAP. Okay. Under absorption costing, the cost of goods manufactured includes direct materials, direct labor, and factory overhead costs. Both fixed and variable costs are included as part of factory overhead. Okay, in the financial statements, these costs are included in the cost of goods sold in the income statement, and if you have any inventory, that is outlined in the balance sheet. Okay, so the reporting of operating income under the absorption costing looks something like this. We're going to have our sales minus our cost of goods sold will give you your gross profit. Then you deduct your selling and admin expenses, and that will give you your operating income. Okay, fairly straightforward. So if this is something that you're going to prepare for your external stakeholders, you have to oblige and use absorption costing. Now, it's a different story if you're preparing reports for internal use. Variable costing is used for internal use in decision making and is often used by managers. Okay? Under variable costing, sometimes called direct costing, the cost of goods manufactured includes only variable manufacturing costs. Thus, the cost of goods manufactured consists of the following: direct materials, direct labor, and variable factory overhead. So in this section, we exclude any fixed factory overhead. Those are not included under the variable costing method. Okay? Under variable costing, fixed factory overhead costs are not part of the cost of goods manufactured. Instead, fixed factory overhead costs are treated as period expenses. Okay? So under variable costing, any fixed factory overhead cost is treated as a period expense. Okay? And then they show you here an example of how to report the information in the income statement using the variable costing method. Okay, so you're going to begin once again with your sales. you're going to deduct the variable cost of goods sold to get your manufacturing margin. And then once you have your manufacturing margin, you're going to deduct the variable selling and admin expenses, only the variable, okay? And that's going to give you your contribution margin. So if you notice, the top section only takes into account variable cost of goods sold and variable selling and admin expenses, okay? Once you calculate your contribution margin, then you deduct your fixed cost. You're going to deduct your fixed cost from fixed manufacturing costs and fixed selling and admin expenses. You get your total cost, you deduct that, and then that will give you your operating income. Okay? So they've also provided you with Exhibit 1, which basically shows you the differences between absorption and variable costing. So under absorption, we said we included direct materials, direct labor, variable factory overhead, and fixed factory overhead. Under the variable costing method, we include direct materials, direct labor, and variable factory overhead only. Okay? The fixed factory overhead is treated as a period expense. So it makes a significant difference of how do we allocate those fixed factory overhead. Do we allocate it to the actual manufacturing process, or do we allocate it as a period expense? Okay? So now that we've briefly gone over the terminology for the section that applies to this problem, we can begin to tackle it. Okay? So let's begin with the absorption costing income statement. This is the one that is required by GAAP if you are going to be preparing financial information for external stakeholders. Okay? So we always begin with our sales. Okay? How much do we make in sales? Okay? So the sales is $1,250,000 that is provided to you in the problem, $11,250,000. We don't have to do any calculations, it's right there, $11,250,000. Okay. So we do that, and then we are going to calculate our cost of goods sold. And under our cost of goods sold, we're going to have the cost of goods manufactured. Okay. So let's go back to the summary. Okay. So we have our sales minus our cost of goods sold. Now under the cost of goods sold, we have what we manufactured. Where do we go? Over here. Okay. So how much did we spend in the manufacturing of those mini fridges? Okay. So that is the cost of goods manufactured and they give you a total already. The manufacturing costs are your direct materials, direct labor, variable manufacturing costs, and fixed manufacturing costs. And they give you the total of $9,157,500. That is how much you spend manufacturing those mini fridges. Okay. Now, included in that cost is the manufacturing of 165,000 mini refrigerators. Now you have to ask yourself, did I sell all of my 165 mini fridges this month? And the answer is no. We only sold 150,000, which means 15,000 have not been sold. So because those mini fridges have not been sold, we are not going to include them in this section because those are still pending to be sold next month. Okay, so we need to deduct the cost of those 15,000 mini fridges that are not sold so we can accurately report the information because our sales are based on those 150,000 mini refrigerators that we sold. So our costs should correlate and tie to those 150,000 units of mini refrigerators that were sold. So now we need to do a calculation to exclude the inventory as of March the 31st. That is the inventory that has not been sold. Okay, and I'm going to do a little calculation here on the bottom. That way we can have it handy. So what are we going to do? Well, I know that I spent $9,157,500 manufacturing 165 refrigerators. Okay, so what am I going to do? I am going to divide that by 165,000 refrigerators. Okay, so I spent, let's get our calculators. I spent $9,157,500 manufacturing 165,000 refrigerators. So that means that it cost me $55.50 to manufacture each unit. Okay. Okay. So now that I know this, okay, how many refrigerators do we have left? Okay, so we're going to calculate our ending inventory. Well, I know that I did not sell 15,000 refrigerators. And how do I know that? Well, the problem tells you that you manufactured 165,000, okay, and you sold 150,000. So that means you have 15,000 refrigerators that you have not sold. So that's 15,000 units, and I'm going to multiply it by the $55.50 per unit, and let's see what that gives us. Okay. 15,000 times 55.50, that gives me 832,500. So I am going to deduct those 832,500 because that is not cost associated with my sales for the month or my cost of manufacturing, because those goods have not been sold in the month of March. So I'm going to deduct that, and that is going to give me my total cost of goods sold for the period. Okay, and then we get those two. So the 9,157,500 minus the 832,500 will give you 8,325,000. Okay, that is the total cost of goods sold. That is how much I spend manufacturing the 150,000 mini refrigerators. Okay, now that I have that, okay, I can calculate my gross profit. Okay, how much money did I make on these sales of fridges, right? So let me underline here. Okay, so what I'm going to do is I'm going to get my sales of 11,250,000 minus my total cost of goods sold of 8,325,000. I'm going to subtract those two numbers, and it's going to give me a gross profit of 2,925,000. Okay, so that is my gross profit. That is before my selling and admin expenses. Okay, so now I have to factor in my selling and admin expenses. Okay, and according to the problem, if we look at our selling and admin, we have 450,000 for variable and 1,125,000 for fixed. Total 1,575,000. So they've already given you the total selling and admin. So I'm going to subtract the 1,575,000. Okay. Let me format it like that. Okay. And now I can calculate my operating income. Okay. This is what I have left over after covering my selling and admin expenses. So I'm going to go ahead and do the math. And because I am using Excel, it's just much easier. Okay. Let me delete this. Okay, so I got my gross profit of 2,925,000. I subtract my selling and admin expenses of 1,575,000. So that's going to yield an operating income of 1,350,000. Okay. Under the absorption costing income statement, that is what I would be reporting for operating income for the month of March, 1,350,000. Okay. Now we're going to repeat the same process, but now we're going to use variable costing. And under variable costing, under the cost of goods, under the top section, we're going to only account for variable cost. If you recall from the summary over here that we have, the cost of goods manufactured consists of direct materials, direct labor, and only variable factory overhead. Okay, so we're going to be doing a split on the cost of goods manufactured. We're only going to take into account the variable factory overhead. And then under the fixed cost, that is where we're going to bring in our fixed manufacturing and our fixed selling and admin cost. Okay, so let's see how it differs so we can have a side-by-side comparison. Okay, so we always begin with sales. That does not change. We have 11,250,000 in sales. Okay. Then we have our variable cost of goods sold. So you see the top is just regular cost of goods sold. Here we have variable cost of goods sold. So under the variable cost of goods sold, what are we going to do? Well, we're going to figure it out, okay? So the first thing that we're going to bring in is our variable cost of goods manufactured. Variable cost of goods manufactured, okay? Now, I'm going to do the calculation in the bottom. That way you can have for reference. How are we going to calculate that? Okay. Well, the problem tells you that your manufacturing costs are $9,157,500. That's going to be our starting point, $9,157,500. That includes materials, labor, variable, and fixed manufacturing costs. I am going to go ahead and I'm going to deduct the fixed manufacturing cost because that is not included in this calculation. So I'm going to deduct the $2,475,000. And then that would give me, let's get our calculators out, 9,157,500 minus 2,475,000. So that will give me 6,682,500. Okay. So that's 6,682,500. You can do it either that way, or you can simply just get your direct materials of 1,980,000. You add your direct labor of 4,290,000. And you add your variable manufacturing cost of 412,500, and it will yield the same amount, 6,682,500. All we're doing is excluding the fixed manufacturing cost. To me, it's simpler to get the total, 9,157,500, exclude the fixed manufacturing cost, and voila, give you the same number. Okay, so either option works for you. Okay, so we're going to bring that in. 6,682,500. Okay. And then we're going to deduct our ending inventory because remember we do have those 15,000 units that we did not sell that we're going to carry forward for next month. Now we're going to have a calculation for that one. Okay. Okay. So now my variable cost of goods manufactured has changed. It's now 6,682,500. Up here it was 9,157,500 that we were splitting. Here the split is being made on the variable cost of goods manufactured only. So we're going to get the 6,682,500 and we're going to divide by the 165,000 units. And let's see what that gives us. So we have 6,682,500 divided by 165,000 units. So that's going to give me $40.50 per unit. Okay. So now that I know that, I am going to do my calculation right here. How many units did I not sell? Well, you have 15,000 units that you did not sell, that they're still available. And my cost per unit is $40.50. So let's see what that gives us. So we have 15,000 units, add 40.50. That's going to give me 607,500. So I'm going to deduct the 607,500. Let me format it the same. Okay. So now I can calculate the total variable cost of goods sold. So I'm going to go ahead and I am going to do the calculation. So what did we do here? We got the variable cost of goods manufactured minus my ending inventory. So the 6,682,500 minus the 607,500 gives you 6,075,000. So that is my total variable cost of goods sold. Okay. Now we're going to calculate our manufacturing margin. Okay. For the manufacturing margin, we're going to go ahead and we're going to get our sales minus our total variable cost of goods sold. Okay. And that would give me 5,175,000. Okay. Now that we have that, we are going to deduct the variable selling and admin expenses. Okay. And according to the problem, we have variable selling and admin expenses of $450,000. Okay. So we're going to deduct, now let me put this under minus. Okay. And let me format it the same way. Okay. Okay. So I'm going to get my manufacturing margin of 5,175,000, and I'm going to deduct my variable selling and admin expenses of 450, and that's going to give me my contribution margin. Okay, so we're going to go ahead and we're going to do that calculation. So we're going to get our manufacturing margin of 5,175,000 minus our variable selling and admin expenses of 450. That's going to give you a contribution margin of 4,725,000. Okay. So that is my contribution margin. This is what we have available to cover our fixed cost. Now we're going to deduct our fixed costs. Okay. And we have two types of fixed cost. The first one is our fixed manufacturing cost. Okay, so we have our fixed manufacturing cost. And for that one, we have, if we look at the problem, fixed manufacturing cost, we have 2,475,000. Okay. And then we're going to go ahead and we're going to bring in our fixed selling and admin. So we've grouped our fixed costs at the bottom. We've grouped our variable costs on top. So we have them separate. Here we have our fixed selling and admin. Of 1,125,000. Okay. So we have total fixed costs, if we add those two together, of $3,600,000. That is my total fixed cost. Now to get my operating income, okay, and I misspelled operating income, okay. To get our operating income, what we're going to do is we're going to get the contribution margin, which is the 4,725,000, and we're going to deduct our total fixed cost, okay. And then that gives me operating income of 1,125,000. So if you compare the absorption costing with the variable costing, the operating income is larger under the absorption costing method than it is under the variable costing method. Okay. Now requirement 3 says to explain the reason for the difference in the amount. Okay. So under the operating income reported under the absorption costing, okay, exceeds the operating income reported under the variable costing by $225,000. So how do we know that? Well, the top section is 1,350,000. The bottom section is 1,125,000. So that means that my operating income is 225,000 greater under the absorption costing method. Okay. This is due to including $225,000 of fixed manufacturing costs in inventory under the absorption costing. So under the absorption costing, under our cost of goods manufactured, we included the entire $9,157,500, which included our direct materials, direct labor, variable, and fixed manufacturing cost. Okay. Under the variable costing method, we only took into account our direct materials, direct labor, and variable manufacturing costs. Okay. The $225,000 was $225,000 difference is basically deferred to a future month under the absorption costing method, while it was included as an expense for March. Okay. So if you looked at your expenses using the variable costing income statement, under our expenses, we have fixed manufacturing costs as an expense rather than us allocating the portion that we did on top to the actual manufacturing of the goods. So it's just a different way of calculating it. Like I said, if you are going to be preparing the financial statements for stakeholders, you are required to use the absorption costing. The variable costing is more for internal use for management, so they can figure out the things they can control. Variable costs are costs that are controllable, that are dependent on how many units are being produced. It is tied to the manufacturing process. And they separate the controllable costs from those costs that you cannot control. Fixed costs are going to be there. If you produce 10,000 units, 20,000 units, the fixed costs are fixed. That will not change. So under the variable costing income statement, those costs are segregated. So first they figure out what is my contribution margin before any fixed costs. And then, of course, those fixed costs for fixed and selling admins are not factored into the manufacturing cost process, but rather are used or categorized as just regular period costs under fixed manufacturing cost. Okay, so this is the comparison. These are the two income statements that are being asked of us to prepare. Okay, it is important that you read the sections on your books. They give you a lot of information. They give you examples. So please make sure that you do use your ebook. A lot of the questions you have are going to be answered there. So it's just a matter of looking for the information, reading it, looking at the different examples being provided so you can be able to apply it to the problem. Okay? So that is it for this lecture. Let me take a look real quick. So this problem 21.1, will also be on your exam. This will be on your final exam, so please make sure that you understand it. If you have questions or concerns, please do not hesitate to contact me. I want to encourage all students to please utilize the 2 attempts being provided on your homework. In accounting, you are not going to learn by me talking to you for hours and hours about content and definitions. No. You're going to learn accounting by doing it, by practicing. The more you practice, the better you're going to get at it, and the better you're going to understand what you're doing. Okay? Maybe the first time around it doesn't make sense to you, but the second time around, you know what? I'm beginning to put the pieces together as you read and as you apply it to the problems. Okay? So I highly encourage that you utilize those 2 attempts. Remember, the highest grade is always retained. So if you do worse on your second attempt, then it doesn't matter, because you know what? I'm keeping the highest grade, but you did get that additional practice, and it will help you if you have questions or concerns. You get with me so we can get those addressed before your exams come around. Okay? So that is it. Questions or concerns, do not hesitate to reach out to me. My office hours are in my syllabus. You can always send me a Blackboard message, an email, or a Pronto message, and I will try to respond as quickly as I can. Okay, that is it. Have a wonderful rest of your day, and until next time.